In this video, I want to talk about how we sold a bank cash value life insurance. And it was a bank-owned life insurance policy. They've all actually bought two policies. It's a number of policies, but two transactions, I should say, that have been relatively large over a span of 12 months. Banks love cash value life insurance. We are going to go through one of those policies so you can see the actual structure, the company selected, and then really have insight as far as what these corporations, banks are doing with their money and how you can copy it to the greatest degree possible if you're considering a policy. So how I met this bank, they are local. I do bank with them. They are a medium-sized bank, small to medium. They've got between $700 and $800 million in assets, and they have a great mindset. When I say that, they're not like most banks. They care about their employees. The owners are more old school. They listen to their employees. They've got a business mentality, but they're also a bank, so they have to deal with all of the regulations that are regulations and no one wants to deal with. Talk about compliance. I think it's bad in my industry. That's a whole nother animal. So I had met them in, I believe it was late 2018 or early 2019 about BOLI, bank-owned life insurance. So I had a meeting with them, with the board members, the executives, so the co-CEO, a former examiner that was employed by that still is employed by the bank, and another individual that has interviewed I don't know how many different BOLI agents, and he was a bit aggressive in the beginning. I remember I had a phone call with him. He's like, "What do you need this census for?" Yelling at me on the phone. I had asked for information, and I got a survey or a census from someone else who had experience with BOLI, and it had some misinformation on that. This guy noticed it, and he's grilling me on the phone. And I'm like, "Gotcha. No, thanks so much for making me aware of that." And here I am sending like the information. I didn't know what was sent. I'm like, "Thanks so much for sending that. Tell you what, I'll definitely look at that, make any and all corrections." And so you're aware, Mike, his name was Mike, of my process. What I like to do is show a number of options. This way you can see what works, what doesn't work. We typically start very broad and then start to narrow things down. So what I had sent you via the census, that is a means for me to collect as much information as possible, which is all confidential, and then we're able to provide you with several options. If you want to start with a partial census, that's perfectly fine as well. So just making things as convenient as possible for him, especially when he's coming with the boxing gloves. I'm like, no, I don't want to fight. I'm on your side. But I had a meeting in that boardroom, and my sister's with me, my sister-in-law, but she's my sister. And I remember just going through everything. They're interested in bank-owned life insurance, and I'm going to explain a little bit about what happened in that meeting. But at the end of that meeting, the big dog walks in, the owner of the bank. So the CEO, I met with the co-CEO. He's also the CFO that handles all the financials. But the big dog walks in. Everybody stands up quick because that's how he is. And he's like, "How you doing?" Tells me some stories about some hunting experiences because he's into hunting. I'm not. My dad is, but he is. And he's got always entertaining stories, the owner of the bank. And at the end of the call, at the end of that meeting, he walks out and says, "You got competition." I'm like, "Thanks for letting me know that. That's a lot of fun. That's comforting, right? You're going to do business with me." So the competition was actually a friend of his who I believe, I'm not 100% certain on this, but I'm pretty sure, I believe is the same agent or advisor that sold the owner of the bank his personal policies. So the owner had owned policies personally, and they're meeting with someone else. The co-CEO told me, yeah, the other guy's his friend as well. At one point, they were considering working with me and him, splitting the business in two. And I'm like, "Hey, I will help you however possible." I'm honored and privileged to be able to even work on a BOLI deal because they're so rare. They really are, in order to actually get banks that want to talk to you and work with you, because there's a couple of big players in the country that just focus on BOLI. But getting this one, I'm thrilled about it. The learning experience was the fun part. So meeting with competition, the bank is, also meeting with me, and we got them. And a couple reasons why. I talk about this all the time with individual meetings and we train our team on it. This is the most important thing you can do in the business. Number one, listen. Listen to their concerns, and then also ask questions. Do not, and I made it a point not to do this, do not go into the meeting with some big grand presentation that's going to knock their socks off. You can, razzle dazzle them with numbers and such. That's what I used to do. And in fact, I won't get into this story. A couple of years earlier, I had flown out to meet with a company in the Midwest, and I did that. I didn't listen and ask questions. I went to the meeting with some big presentation, going over different options, and I blew it. Flew out there, lost the deal. Great learning experience though, but I completely blew it. So from learning from past mistakes, I knew I'm not going to go in there, be stubborn, and try the same thing again. Experience tells me what? Listen, like I like people to listen to me when I'm expressing something, and ask questions. Here's what the bank was interested in. So like most banks, they're interested in the company selection. When they're taking out this BOLI policy, what insurance companies will it be placed with? They were interested in top tier companies. The examiner, one of the executives, he's a former examiner, but he works for the bank, whiz with numbers. I really like talking to him. He saw banks, he worked at banks in the past, he saw all of them had BOLI, and he knew what companies to look for. He knew what the performance should look like. Major mutuals came up. Mass Mutual, New York Life are typically number one and number two. Guardian is good for community banks. They've got a really nice BOLI product for $5 million and under. Then Northwestern's great as well, but Northwestern has a captive set up as a broker, can't use them. But that's okay, there's other companies too. But company selection, major mutuals, he knew it. Guarantees. The guaranteed rate and guaranteed cash value was very important to them. They wanted details on that. So I'm going to provide it. I'm also going to show the guaranteed values and really hit on that. That is the least attractive part of the illustrations of the policy performance. When you're in any type of sales situation and you're going through the numbers, never just say, here's the guarantees. They're never going to happen. Let's just not look at them. Show them to people. You like to see guarantees. I like to see guarantees. Is it realistic? No, it'll probably do better, but at the same time, hit on that point if that's what the person wants to talk about. Net returns were very important. In fact, when you look at a BOLI policy, the performance, if you look at the annual internal rate of return, how the net returns work on that, typically they make a deposit, $10 million. They've got more than $10 million on the balance sheet immediately. But then it'll keep growing each year, but if you study the net growth on the policy, it gradually decreases year over year. And I asked, I'm like, hey, did you notice that the returns on the policy gradually decrease over year? To the CFO, I asked him, he goes, yeah, I did notice that, and I don't really understand it. I see this crediting rate that the company says it's crediting, but it don't match up when I actually crunch the numbers. Happens all the time. So I asked the question, did you notice that? Yeah, I did notice it. You can tell he wanted that more information on it. So the reason for that, Mr. CFO, is you've got an insurance policy where the insurance expenses actually with the BOLI policy gradually increase, and it's illustrated at a constant rate. So yes, you keep going up, but what you'll see is as the insureds, the people you put these policies on, or this policy on, the actual returns will gradually decrease as they grow older. It'll always be profitable for you. However, that's why we see the returns go down over time. Because thanks for that information. I didn't know that. So CFO guy or CFO, he wants the numbers, provide the numbers and the information. Long-term profit, very important to them. Very important to them. And that specifically has to do with the death benefit here. So the cash value in the balance sheet is very attractive, just continues to appreciate over time. And this is the same for an individual whole life policy, like my policy you're considering. You can do that, just have the long-term cash value growth. But when I say the word profit, with banks, it's a little bit different. Banks often cover health insurance benefits, 401k matches or contributions for their employees. They've got a lot of benefits there that go out to their employees. That death benefit is used as a means of cost recovery to come back, pay the bank income tax-free, the death benefit, and recover all of those costs they've paid over time. And then here's the thing that I really liked. When you think of banks, do you like banks? A lot of people say, I hate banks. They take my money, earn a lot with it, and I get next to nothing. When I said this bank was different, they're very concerned about their employees, and not just the executives either, everyone. They said, whoever we put these policies on, and as they continue to add more, I want to make sure, this is from the CFO and co-CEO, he's going to take it over. He said, I want to make sure they are taken care of. Like, I don't want to just take these policies out and have the bank reap all of the benefits. If someone signs the paperwork, there's no underwriting, medical underwriting for this, it's guaranteed issue. If someone signs the paperwork and agrees to this, how I want it set up is they set up what's called a split dollar plan. And what this involves is a percentage of that death benefit goes to the employee or to the employee's death benefit to the employee's beneficiaries at their death. What they did is a one-time salary. So if they had an employee that was earning $100,000 and he or she dies, $100,000 goes to their beneficiaries upon their death. And that's money that doesn't flow back to the bank when the bank is fully covering the cost. So it's nice when you talk to people that care about everyone, that's trying to help grow the company, grow the business over time. In addition to all the other benefits, they said, we want to give them something too. They don't have to. Not all banks do this kind of stuff, but they did. So that was important, so we made sure we set it up there. Point here, listen and ask questions. Listen to what they want, and then when we show the final models, make sure everything they requested is in there. That is so important. You don't have to be working with banks to do this. It can be anyone. Let's look at the numbers real quick, and then we will conclude. So this was the second policy purchase. $10 million. Look at the company selection. And these are on, this policy purchase was on 30 executives. Some of the policies were on 28, depending on the age and the guaranteed insurability, but 30 executives to sum it up. We see company A, $6 million deposit, then two $2 million deposits. With banks, they will diversify companies, and they often have to as well because of regulations, depends on the size of their balance sheet as far as how much can go with each insurance company. But here's where it's interesting. Here's what individual policies do not offer. A $10 million deposit and an immediate return, $10.2 million. Look at the death benefit on this thing, $24 million. Multiply all this by 2, by the way, because they've got another policy. 24, and just continues to appreciate over time. Run at current assumptions, and each product is going to be run at different rates because it's with different companies. General account BOLI, no hybrid, nothing like that. General account means they just participate with the insurance company's general account investment portfolio and appreciate with it over time. So, hope you found this one insightful as far as what banks do. If you own a bank or would like to connect at any point in time to learn more, we're always happy to connect with you. But if you found this informative, please click the like button, subscribe for more, and as always, I hope this helps. Talk to you soon. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.